Hello, everybody, and welcome back to another episode of the Rogue Agent Answers. My name is the Rogue Agent. Some people call me David Lewis, and every week I answer one of the many life insurance related questions that I've received from clients, from email subscribers on the daily email list, questions floated to me from across the interwebs, in the comments sections, which I know you're not supposed to read, or just interactions that I've had with people in real life over the past 20 years, which is a long time. And some of these questions I just scribble down on scrap pieces of paper. Some of these are stuff I've written down on my phone. Some of it is on Post-it notes scattered all over the office. And every week I answer one of those questions. So if you'd like to ask your question, drop them in the comments section or join my email list for more life insurance tips and advice at monogenics.com. MONEGENIX.com. And now for this week's question. This week's question is interesting. Probably one of the most unique questions I've ever had about life insurance is, what happens if there's a bubble in life insurance? What happens if there's, what would happen to the life insurance policies if too many people bought them? Okay. Short answer is won't happen. Life insurance companies control the issuance of policies. So in that sense, it's not an open market where anyone can just come in and buy or sell an unlimited number of policies, manipulate the market, bid up the cost of insurance, short policies, or otherwise create havoc in that marketplace. All life insurance policies go through financial and medical underwriting. So even if someone qualified medically and financially, life insurance companies are not under any obligation whatsoever to issue a policy. They could turn down an applicant, and they have done that in the past. There's been a time shortly after 2008, when the bond market collapsed, there were life insurance and annuity companies that basically just put a moratorium on issuing policies. They simply wouldn't do it. They waited. It was about 6 months-ish, where agents could not sell policies, couldn't sell annuities, couldn't sell life insurance. Underwriting teams were not looking at applications. They basically just went on hold until the bond market improved, where they had really more confidence in pushing and picking up, in purchasing bonds and being able to place business. Because, as soon as the insurance company takes the money, they have an obligation to make good on the contract that they just sold. And so across the board, the carriers in the industry simply said, we're putting a moratorium on applications for 6 months. And I remember being in a position where carriers simply would not accept applications. And, you're essentially out of business for a while, but, the business came back. I'd never experienced anything like that before. But the business came back and then everything was fine. So this is very different from stock markets, where everything is essentially always for sale. And yes, you can have volume and liquidity issues where, you can't get your order filled either on the buy side or sell side, where you can't get it filled or whatnot. But for the most part, it's if you can see a bid or ask price in your brokerage firm, in your trading platform or whatever you're using, you can place your order, and it's in that sense always for sale, or you can always either buy or sell. And where purchase orders or sell orders are more or less obligations for the buyer or the seller to deliver the stock or to take the stock off your hands. So, there's a huge contrast there. It's the life insurance market is not anything like equity markets or bond markets or any other market, really. And when carriers suspended, rather than allow things to get out of hand, insurance companies just suspended new apps. And when they did that, it was sort of like, we're just going to focus on our existing business for right now. Everything's going to be fine, which it was. Everything ran smoothly. Every policyholder was paid what they were owed during that time. And companies actually increased their dividend payouts, believe it or not, because the existing block became more profitable, even without applications, even without new money coming in. So everything was actually fine. They just couldn't afford to take on the risk of new applications. And eventually, like I said, they decided to accept new applications again, and it was business as usual. And so, while I think it's theoretically possible for people to try to bid up the price of bonds in the short term, which is what carriers buy to secure the guarantees. It's much more difficult to do. It's a lot more difficult to do that than it would be to do something like that in the stock market, especially if it's like penny stocks and stuff like that. The bond market is just huge. It's insanely huge. And even then, carriers are still insurance companies are still going to kind of have a way around it. Maybe not totally circumvent it, but it's just so unlikely that, and they have ways to deal with that. So for the most part, insurance companies also don't trade bonds like a typical bond trader. So they're not too worried about price and interest rate fluctuations caused by day trading. Carriers will take they will sell bonds for profit and take capital gains off them, but they're not doing it in the same way that most active traders are doing it. And then, there's various other hedging techniques that insulate them from other types of market manipulation. They can buy puts and interest rate swaps and all this other stuff. So, all of which is good for policyholders, because that kind of, takes does what it's supposed to do, right? It takes risk off the table. The policyholder's not taking the risk. The insurance company's taking the risk and insulating their policyholders from that. And then, and policyholders are expecting insurers to make good on their promises for another 100 plus years. And that's how insurance companies do it. Okay, that's it for this week's question. If you'd like to add your question to the list, just drop them in the comment section or send me an email. And if you want more life insurance tips and advice, just head on over to monogenics.com, MONEGENIX.com, and sign up for my daily email list.